Want to look at something different, still on those assets. This time around, let's touch on research and development and inventory. So those two. And as this one, which required normal substantive procedures for valuation of inventory. You can see it's very specific. It's asking for valuation of inventory. So, and I told you anytime you hear valuation, it's about recoverability. So, which means that it's asking you to perform procedures. Give us substantive procedures how you have comfort that the value that's been recorded for inventory is the right value that will be recovered, at least in the future. Okay, that's A. Then B is talking about R&D. C is liability. I'm not looking at that now until we've done the process. Okay, so let's look at the question itself. Inventory. I'm just going to read this straight away because I'm conserving my voice. The firm attended the year-end inventory count for Hyacinth Co. and confirmed that the controls and processes for recording work in progress and finished goods were acceptable. WIP and finished goods are both material, yeah, and the audit team was able to confirm both the quantity and stage of completion of work in progress. Before goods are dispatched, they are inspected by QC. Just prior to the inventory count, it was noted that a batch of product line called Crocus, which had been produced to meet customer specific technical requirements, did not meet the customer's quality and technical standards. This inventory had a production cost. This is a cost. But upon discussion with the production supervisor, the finance director believes that the inventory can still be sold to alternative customers at a discounted price of 90. Now we're asked to come up with procedure on valuation. Talking about inventory. And we're asked to come up with procedures for valuation assertion. You see, it's specific. It's not talking about right. It's not talking about existence. It's not talking about completeness. So if you are talking of valuation and you want to write a procedure and you're saying trace select samples of inventory and check the invoices or check for payment, is zero because that is talking about existence. You're talking of something else. You're talking of right. You're not talking of valuation. The question was specific valuation assertion. And what is valuation assertion? It's about coverability. How do we have comfort that we will recover the amount that we have on the financial statement? Look at this question. They gave us a cost, I think 950. And out of that 950, they said they can only sell for I think 90 or 450 and can only sell for 90. Yeah, this is the cost. This is the selling price. And you know that IS2 says that inventory must be recognized at the lower of cost and net realizable value. This is your selling price minus selling cost, right? So there's no way you can recognize this inventory at this cost. It has to be at this because this is lower. Hope you're following the process. So your valuation should be at 90. However, you have already incurred 450. For you as an auditor, you cannot even say you are comfortable with this 450. You still need to audit it to be sure it's 450. You need to be sure this is truly 90. And when you're sure, then the difference, you need to be sure that they are posting the right amount of impairment. It's part of it. It also needs to be done. And what is causing this impairment? The question says that the product, after the QC inspected it, did not meet the customer's quality. You need to audit the cost. What is it true? You have to audit this because that is the cause of that problem, right? So if you want to think through it in a structural way, you need to confirm the condition. And we'll still go through the procedures, but I need to understand the issue. So you need to confirm the condition, which is that issue with not meeting up with the standards, the customer standards. So you need to confirm that condition. When you confirm the condition, then is it saleable? Yeah. In that case, you're talking of recoverable amount. What is recoverable? Even after that condition exists, what's the recoverable amount? Then how much did we spend? Every company wants to sell higher than how much they spent. But we as auditor, we need to check all of that. We're not going to just rely on what they've told us. So we need to check how much did the client spend. Yeah. If I say 1, 2, 3, 3 minus 2 is your impairment. It means a loss that must be recognized. Okay. So these are the issues you want to deal with your procedures. So if we say, first, we want to confirm the condition. That's the first assertion we want to do because everything here, look at the questions. This question is how many marks? 6 marks. 6 good marks. So you need minimum of 6 procedures just on valuation. Yeah. Yeah. And all these 6 procedures will be coming from all of this. How do we confirm the condition? How do we confirm that truly there's a problem between what the customer spec is and what we produced? So procedure 1, we need to obtain quality control reports. Remember they did the inspection? So we need to obtain that report, yeah, in order to compare customer specification to the product details to confirm that this is truly different. Yeah. So we want to confirm that condition. So we want to check, give me the customer specification, give me your quality control report. Let me look at the two of them. Oh, okay, I can see. This is customer wants two elements of potassium. The quality control report shows that there's only one element there. Okay, it does not agree truly. Yeah. Sometimes you as an auditor cannot check those specs yourself, right? So another procedure you can alternate. Apart from that, you can get an expert, right? So engage the same thing you're trying to do, but this time around you're using an expert. Yeah, please don't say because it's addressing the same thing, you won't write the procedure. Everything in this place is addressing the same assertion, valuation. Once there are different procedures, please write all of them, regardless of the fact that because it's the same thing valuation that we are addressing. Don't say I've written something like that. It's different. So this time you are engaging an expert to review the product spec and confirm if it is truly different from the customer's spec. Yeah, they're still confirming the situation. Now, these two helps to confirm that situation whether there is truly disparity between what the customer wants and what we have produced. Now, there's a disparity. What is next? So we've confirmed the condition. Now, what is the recoverable amount? Is it saleable? Yeah. So request clients to to provide evidence of customers. Remember, they said other customers are interested. Yeah. Yeah. Alternative customers. Want to see that evidence of their interest that they will buy for 90. So we're gonna ask clients to provide evidence of customers' interest to provide purchase the products for 90K. Now, with this one, you have audited the recoverable amount. Now, we need to check how much did the client truly spend, which is cost. We need to audit the cost because everything ties down to the valuation that we're doing, right? So we need to check how much did we really spend. Yeah, so we're going to obtain cost details, or we call it schedule, and agree to invoices because they would have paid invoices to incur all those things on raw materials, labor, and other items. Yeah, you want that because this now gives you evidence that the cost is fine. And if cost is fine, then you can determine your impairment. So calculate impairment and ensure the right amount has been expensed. Remember, it's a loss. But that's not just it. Remember, the question is asking that procedure for valuation for all the inventory. The only thing is, yes, there's one product that had problem, crocus, but there's still other products of inventory that they have. This is just a line, yeah. This is just a batch. So we still need to speak about the other inventory. Yeah. So now we've dealt with the damage in the defective inventory. There's still we need to still talk about other inventory, generally speaking, because even if you are asked this question without this kind of defective issue, you still need to be able to come up with how you will check for recoverability, which means valuation. Yeah. And you can't talk of you can't talk of inventory count because the question already said they've done inventory count and they are okay. Look at it. You can't talk of work in progress as well because they said they are fine with it. See, the audit team was able to confirm both the quantity and stage of completion. They said they attended the inventory count, so they've done it. And they've confirmed the controls, the processes for both WIP and finished goods were acceptable. So you can't bring those procedures again in your write-ups. If not, you will not earn mark. That's why you have to pay attention to the question and make sure you're addressing the question and not just pouring out what you know. Okay. So for other inventory, how do we check for the recoverability? Another thing we need to do is to check for inventory, check for samples of inventory sold after the year end. Confirm that the net realizable value is not less than the current value at year end. Because if you check those inventory that were sold after the year end and say maybe they were sold for 14 million and at December you were carrying them at 50 million, it means this is overstated because this is a recoverable amount and this should have been the value here. So that's another procedure you can do for valuation testing for recoverability. What else can you do? There is more you can do. You can also inquire or engage the management and check that they've taken into consideration obsolete or damaged items in the evaluation. So engage management and ensure that obsolete, remember obsolete items or damaged items will also be impaired. So damaged inventory has been valued appropriately and recorded. Yep. So we have 7 already. I think you need just 6. How many do we need for that question? We need 6. So you have 7 on valuation. You can see. Then B want us to talk about R&D. R&D. R&D is also an asset. And remember what I told you in last class? The way they always want to test it is you need to know the requirement of IS 38, which says that generally you expense this cost, except three criteria are met. We're talking of financial feasibility, technical feasibility, and future economic benefits. This commercial feasibility. These are the things you are checking for. Once you check for that, then you've tested for existence of the assets. Then you can test for accuracy of valuation. You can also test for amortization. And you can see you already have a lot of procedures. But let's see the question specific. What are they asking us to do? Describe substantive procedures just should perform to obtain sufficient and appropriate explanation to this. So it's generic. They didn't ask us specifically to address a particular assertion. So we're going to address all assertions for the marks we have. We have 4 marks, which means we need to start with what assertions are relevant. Existence is relevant. Accuracy evaluation, right, completeness, P and D, like that. 4 marks, you just need 4 procedures. So let's see, we can come up with 5. Okay, so what I said is for existence, it has to be an asset, and all of these must be satisfied. So let's say number 1, obtain budgets or forecasts from management and check if enough fund has been set aside to complete the R&D projects. Number 2, you need to check technical feasibility, engage the clients to produce or to provide sample products or prototype already made and not just made, already made and functioning. That's how we will check if the project is technically feasible. That means do they have the technical capacity? Yeah, that's done. That's done. What about commercial feasibility? Can we sell it? Inquire. I want to ask them, have they sold any before? Has anybody sold in the industry before? So inquire from management to provide evidence that similar items have been sold before. Right? And that gives you commercial feasibility because now you can say, yeah, there's likelihood that there will be future economic benefits. And we're done with that. Then we can come to valuation accuracy, which is where you now start testing the figure. Yeah, so obtain the schedule of expenditure select samples, and request for the invoices to agree the amount. This gives you comfort on existence, on rights, on valuation. What else can we do? So we've tested that. We need to test amortization. Yeah. So amortization, I told you, whether it's depreciation, whether it's amortization, there's a policy. Yeah, they told us. Said, right, said intangible assets are amortized on the straight line over 4 years. We need to test that policy. This is the policy. When we've tested the policy, then we need to test the amounts, right? So how do we test the policy? There are only two ways of testing the policy. Number one, so when we test the policy, we say obtain the amortization policy and check for reasonableness. That's what we will say. Is it reasonable? And how do you do that? Check for reasonableness by comparing with what? With industry peers. And once you check for policy, you should recalculate amortization. Similar to what you do for depreciation. Remember what I said? They are the same thing. The only thing is you use the word amortization for intangible assets and depreciation for tangible assets. So recalculate amortization figure based on the policy and investigate any material difference. That's it. You need 4, you have 6. So with that, we've been able to touch on account receivable, R&D, and inventory. Any question on this one? Anyone? Any question? I hope this is clear.
Question on the number 5.
Please.
What are we comparing with the industry peer? Is it like how many years the equipment or whatever they use for the production, research and development is
So
valuable for?
yeah, look at this. This is a policy. So usually when you have developmental cost, you need to amortize it. Yeah, if you have a developmental cost, say it's 40 million, that's like having an asset for 40 million. So you ask yourself, how many years are you going to use this asset? Here they said it's 4 years, and you want to use it on a straight line basis. So the question is, should this 40 million be amortized over 4 years or 6 years? Why not 8 years? Why not 2 years? For us to know, we need to compare this period with how other people in the same industry would have depreciated this 40 million. So if development is about, say, patent to COVID vaccine, I know this patent you only have it for 4 years. If say Moderna is doing 4 years, what is Pfizer doing? Are they also doing 4 years, or they are doing 6 years, or they are doing 2 years? So that's what you are checking, because everybody should do the same thing in the same industry, or at least comparably similar.
Okay, thank you.
Good.